Alright guys, so right now I'll get into the A setup strategy. How do we do that? Okay. Now the A setup is really important. That's how we will get some sniper entries. So how do we do that? So for now, I will explain with this one, uh, Australian dollar JPY, which is one of the best for uh, these kind of these kind of account flipping strategies. Um, you can use USD JPY or AUD USD. These are the best for this because uh, of their respect to supply and demands, and their pump are usually more crazier. Their consolidation phases are very less. So once you are on here, right, you will go to 1 hour 4 hour time frame, and you will draw all these things, all these lines and everything. Okay, support and resistance. The white ones belong to 4 hour time frame. Then you will draw it on 1 hour time frame. Okay, the green ones are the one I draw it on 1 hour time frame. Talking about the support and resistance lines. Once you draw that, then you go to 15-minute time frame. You draw the supply and demand zones. So don't forget the supply and demand zones. How does it work? Supply and demand zones only gets respected once. Like price fell very hard from this area, so we are going to draw a sup- supply zone in here. So how do we draw it? We go to the highest wick of it, and then the second highest, the second wick's uh, uh, bottom area. So that's how we are going to, where we are going to put the square there. Once we do that, put it properly. Okay, once we do that, um, you also need to know that the next time price hits the supply zone, it only respects it once. So once it's done, the next time it hits again, it might respect or might not, but it doesn't matter anymore. It should only matter. Uh, it wouldn't apply the next time when price hits it. It just won't apply because it was in here. It dropped hard in here. The next time it will be respecting and the supply zone of this wick. Okay, so make sure you put that into mind. Okay, so the main way we are going to do this is um, we're going to let the price get into the demand, get into the supply zone like this, and get out of it, and then we are going to get in here. Okay, so how does it work? Even if price went out of it, right, we shouldn't trade yet. It's inside back, we shouldn't trade yet. It closed out of it, then we should get into a new entry and then let it ride down. Okay. The other way to trade, the other thing that we also need to be aware of um, is that like sometimes the price will get in, come out. We might have been entered, we might have entered in here, for example. Okay, and the price went back higher. Okay, of course our stop loss is going to be at these kind of wicks, okay, or best in here, okay, like at this level above the square, okay. But the next time we're going to get into another trade, like the second trade is when price breaks this neck level, okay, very important. The second trade we enter is when price breaks the neck level of previous ones, okay. This is where we are going to enter, okay. This here is where we're going to enter our second trade. This is going to be the best trade. And if we want to enter again, price retest in the previous areas, comes back down. closes below previous neck area, we can enter in here. But as I said, we need sniper entries, right? So we are only going to trade the trades that gets into supply zone or demand zone and get out of it. Then we are going to trade those kind of trades. Okay. All right. Same thing in here. We got into trading here. Price went back up. Okay. And we and at this situation, we of course we would have had hit our stop loss because it price didn't respect the um, market places, previous market structure. The thing is that we might hit stop loss sometimes, but the next time we get in, right, um, we will place our stop loss in here and let it drive down. And if we want to get in one time again, we'll let the market retrace a little bit. We put our neckline in here, let the market close below it, and then we get in again. Okay. Um, it doesn't work always, but this is the best trade setup that we can get with. Okay. Um, so same thing for support. I mean, same thing for demand zones. Um, for example, in here, same thing for demand zones. Price get out of it. Okay. Retrace and close above. Then we get into new entries. Okay. Like for example in here. So um, always make sure of that. That follow the rules. The other thing that you need to be uh, paying attention to is this kind of candle that I've earlier talked about, like this. Okay, something that is a square and then there's a wick below it. Okay, like this, a wick below it, like this one. Okay, or to the opposite side, like this one. These are always the reversal wicks. So we let the wick form and then um, another candle that breaks below its neckline, then we can enter a new position to the downside. We can do that many times. So like for example in here, this closed above this, right? We can enter in here, or we can just uh, but but for here we are still in supply area, right? We will only trade once the price break out of it. Okay. So for example in here we see this, we should know like, oh, market is reversing, we need to prepare. Okay. So this is how this is going to be traded. And the last thing is that um, always and always and always, once price break out of uh, once price break out in here, right, and you enter and you see this big candle closes, okay, take profit all the time. Okay, because we are risking big in each trade. We are getting into sniper entries. You see one candle completes, right, take profit. Okay, or if you don't want to take profit, put your stop loss at the break even at least. So guys, this is our A setup. So basically what we are going to do is, uh, let's summarize it. We are only going to trade when price get into the supply and demand zone, gets out of it, okay, close out of it, and then we get into the trade. All right, and then we open a position. Or in other situation, price get into the supply and demand zone, gets out of it, okay, we enter a new trade, and then it retraces back and then breaks the previous open positions areas and then close below the neckline, we enter a new trade in here. Okay, and the last summary is the candlestick. If you still remember that I just told you, um, the reversal candle, okay, it can be it can work in opposite way. If just the candle needs to be opposite, and you will know the price is reversing. So this is the A setup for now. We can improve it later. We can have better entries later, but this is how we are going to trade for now. And yeah, let's do this, guys. Let's flip some good accounts. All right.